Good morning. We will pay attention to consumable stores today. When consumable stores, for example, stationery, packing material, cleaning materials, petrol, oil, are treated as an expense, the expense account is debited every time when consumable stores are purchased during the year. And creditors control and bank will be credited when you purchase it. When consumable stores are on hand at the end of the accounting period, the expense account must be reduced. That means so that we can take the actual stationery or packing material to my profit and loss account to show what was the actual expense during the year. That is the amount that was used. To reduce the expense account, it must be credited, and we will create a temporary current asset account, consumable stores on hand. As soon as you see the word on hand, it means that that is an asset. If only the word is consumable stores, then it's an expense. So when we credit our consumable stores, whether it's packing materials, stationery, cleaning materials, you will create this consumable stores on hand to show that you created the asset at the end of the year with the value of the consumable stores that's available that will be used in the following financial year. Consumable stores on hand is shown together with inventories in the balance sheet as a current asset. It is very important to remember that only consumables that was actually used during the year will be recognized as an expense in your income statement or in your profit and loss account. So the actual expense for the year goes to the income statement, and that will be the part that you've used during the year. The consumable stores that were purchased and that was not used in the current year will be recognized as a current asset in the balance sheet. Even if all the consumable stores purchased during the year are debited in the expense account, only the part that was actually used during the year will be shown as an expense, and the part that was not used will be recognized as an asset. Consumable stores is an expense, so it has a debit balance. So if we want to reduce the consumable stores, so you will credit packing material, you will create an asset. Assets increase on the debit side, so consumable stores on hand will be debited to increase the asset. On the first day of the next financial year, a reverse entry must be done. So you want to close this consumable stores account that you created, the temporary asset, because it's on the debit side. On the first day of the next financial year, you will credit it so that there's no balance in the consumable stores on hand account. And you will debit packing material, the expense account, so that you can show that part of the expenses was already paid for the following year.